We're looking for we're somewhat below consensus. I wouldn't make a big deal about that. I think we're 425 versus I think consensus is 500. I mean, look, the biggest source of uncertainty for us is leisure and hospitality jobs. That was the big miss last month, right? I mean, that's why everyone got it so wrong last month. I mean, that sector showed zero job growth. We were looking for something closer to 400,000. It's would be inexplicable, really, for it to go from averaging near 400,000 over the prior few months to zero last month. These quirky things can sometimes happen. So we've built in a modest increase in the coming month for that sector. I mean, that honestly, I know that might sound boring. That's the biggest source of uncertainty. I think beyond that, though, I think the one interesting thing that could come out is what happens with the unemployment rate. I think that we're sort of expecting, if not this month, then maybe in the next month, you could see sort of more of a, I don't want to call it a surge because we're not expecting a surge, but I think you could see more of an increase in the labor force. Just as sort of the extended unemployment insurance benefits expired, which obviously they expired right ahead of the payroll survey week for this report. So you could see some increase there. If you do, you could actually wind up seeing the unemployment rate rise. I wouldn't make much of that, to be honest. People tend to roll into the labor force after economic crisis only when they're feeling confident about the backdrop. And look, as I think has been pretty widely reported at this point, there's about 11 million job openings versus 8.4 million people unemployed. So I think they have every reason to feel confident.
So Tom, one of the things that we want to talk about now is the broader narrative of inflation with regard to the overall economy. And that puts into focus, for me at least, a specific line item, and that's average hourly earnings. How important is that number going to be this time around?
Yeah, look, I think that if you consider average hourly earnings and what it has done over sort of recent months, it's been rising at a fairly rapid clip. And I think the reality is, if we're right that you do start to see sort of more people really start to re-enter the labor force, you could take some of the heat off of these sequential increases that we're seeing in average hourly earnings. I think that's a reality. So some slowing eventually, and I'm not saying it's going to happen this month, but I think some slowing in average hourly earnings in the coming months is certainly possible. But again, I would stress, because I know that'll be the headline, right? It's, average hourly earnings are flat on the month, whenever it does finally happen. But I think what you have to keep in mind is that the benefit has already been realized. Average hourly earnings have been rising so much for so many months. If you just look at a sort of a pre-COVID baseline estimate of what average hourly earnings would have been had the pandemic not happened, we're wildly above where we would have been. So a lot of the benefits already in place. So for the people that actually do start to roll into the ranks of the employed, they'll still benefit even if you don't see these sort of continued big sequential month-on-month gains.
Just got a couple seconds left here, Tom. Is there any kind of number that would shock the markets right now?
I don't think that there is. I mean, or let me say it this way. I think the range is incredibly wide to shock the market. I would call a neutral range on this number somewhere between 200 and 800,000. Sure. I want to be clear, not a lot of science on that. Just, sort of conversation that we've had with clients over recent days. But I think the neutral range is very wide.